Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of Canadian Investing in the U.S. This week, my guest is Scott Dillingham. If you're looking for contact information for Scott or other lenders, I created a website, CanadianInvestingintheusa.com/lenders. And there you'll find contact information for many lenders, preferred lenders that many that I've worked with, or other ones that I've known or met in person. So you can go there and get that contact information. Scott, you want to start off by giving everybody a bit of an intro to yourself?
Yeah, absolutely. Thanks for having me on, Glenn. I'm so glad to be here. I've listened to so many of your episodes, so it's cool to be a part of one. But yeah, so I've been investing myself for 10 plus years, and I've been a mortgage lender mostly in Canada that whole time. And then once the rates started to really get out of hand, I decided to open up in the US, right? So we've been doing US lending for some time now. I'm American, so I was born in the States, so I always liked the market, but my family and with divorce and stuff, we settled in Canada. And so I just thought, right, it was roughly a year and a half, 2 years ago, I'm like, this is what we should be doing. The States has so many opportunities. Canada does too, but it's different. It's completely different. So I'm like, all right, I got to get into this. So that's what we've been doing. So my team and I, we do the Canada, US. We even actually do Mexico now. We've got a division starting that too. So we're kind of all over. But I think the US is my most exciting market for sure. And I know it's yours too, right?
Of course, yeah.
Yeah.
So I'm going to start off with a question right off the start. But you just mentioned one thing, that you were American, and I believe you're living in Windsor or in Canada, correct? So like, what would be the advantage of because there's some lenders are Americans, and it's like they live in the US, you're using full American lending, and then there's some lenders who are full on Canadian and they're doing loans in the United States. So what would be the advantage that you would have over these other different types of lenders?
Yeah, so a couple things actually. So if you go to a US broker, let's say, you're not their clientele. Like a Canadian is not their main client. So their products and programs are going to be geared towards more American based. And they will have a couple that are for Canadians. They will be able to help a Canadian. So, it's just, they don't have a ton of lenders. So all of our lenders that we have are specifically for foreign investors. So we have just a lot more options than a US broker would because of that, right? Because that is our client, is a foreign buyer. So everything's built around that. And then I guess the difference between going to me compared to just a Canadian broker is a Canadian broker, even though they'll be able to do your Canadian side just like we can, because I'm dual citizen, I can join these lenders directly, which eliminates the middleman. So the Canadians, you can't, as a Canadian person, just join a lender, right? They want to see that US status. So what they do is they'll get a partner, right? And then that partner gets a small portion of the deal, and then commission wise, right? And then the Canadian broker would get the balance. But because of that, if you're in a competitive scenario, you can't really lower the rates or the fees, right? You're stuck because you have to pay a third party person. So we're direct. So that's kind of, it's a sweet spot, I think, and what my clients have found is we're kind of in the middle there. So
yeah, it makes a lot of sense, because then you're not paying as many people, right? The fewer hands to feed, the more competitive you can be, and over even the American lenders, you can do the Canadian side as well, right? You could, because typically, like a lot of people who are doing this are doing, refinances of Canadian properties first, or something with even setting up a home equity line of credit or something in Canada in order to start investing in the United States, right?
absolutely. And that's what they're doing. I didn't expect that. When we got into the state side, I didn't expect the Canadian side to pick up, but it is, because people, like you just said, they want to access that equity and they're moving forward. And a lot of the clients were using HELOCs, but the rates in the States are getting so competitive, and they lowered 50 basis points yesterday.
Yeah.
I didn't want to date this podcast, but literally the Fed lowered the rates. So that's incredible. So
we're recording this September 19th, if you guys are wondering.
Yes.
Yeah, 2024. Anyway, continue. Sorry. But yeah, they lowered the
Yeah,
rates.
no, that's
Yeah. So tell me a
yeah.
little bit about like your company, or continue on that path. Sorry, I don't know if you need me to.
No, that's okay. So pretty much we've seen pricing grids, not approvals, right? These are pricing grids from the lenders. You got to meet all the criteria. But the lowest I've seen today was 4.9 on a DSCR loan for a foreign national buyer. Like that's insane. Now, of course, that's strong debt coverage ratio. That's a loan size over 300, right? There's different criteria,
Makes
but
it
that is
easier.
absolutely phenomenal, right? Compared to what they have been.
Yeah, yeah. And for people listening, like he did list a few different criteria. Like as you get into, which seems backwards in to most people's minds, but as you get smaller loans, it typically is harder for lenders to find a home for those. And it's easier to borrow a lot of money than a little bit of money, which honestly seems completely insane. Like, in rationale, like if you're borrowing less, you'd think there'd be less risk, but it's because they have to like, securitize and sell those loans in the secondary market.
Yeah,
It's too
exactly.
slow.
Yep,
Yeah.
exactly. So yeah, so that's part of it. So just really exciting on that front, on the rate front. And they're coming down, right? So in the States, a lot of investors don't realize they often ask me to quote the 30-year fixed, but there's adjustable rate mortgages that they can lock into, right? Or not lock into, but get, and then they can ride this wave of rate decreases down. So that's what we've been suggesting to a lot of investors now, because they're actually priced pretty similar. The fixed versus the variable, they're priced very similar. But if you get the fixed, obviously you're locked in.
Yeah.
So
Oh, I don't know if we wanted to go down this path, but like, compared to doing a variable mortgage in Canada and an adjustable rate mortgage in the United States, there is a whole bunch of differences, even like when the rates adjust. And do we want to talk about that, or you want to get into like your maybe?
well, we can. I would just say high level.
Yeah,
The one key difference that I found, so Canada, the second the rate adjusts, your rate adjusts here.
yeah,
Where in the States, usually they review it every 6 months, at least the bulk of the lenders that I have. So even if the rates drop, right, you're still at that higher for a little bit and then they adjust. Or if they go up, right, you still have that window. So then it gives you time to think and pivot and adjust if you need to, instead
yeah.
of just Canada's like, well, we're changing rates and they like you're stuck, right?
Yeah, and if you're working with like someone like Scott or something, they'll explain this to you. But like typically, so if you saw like a 5/6 arm or 5/6 arm, that would mean it adjusts every 6 months, and a 5/1 arm would mean it adjusts every annually on that anniversary date because they don't put .6, even though it really should be, or sorry, a .5 in there. Anyway, well, I love to go into sidetracks because I always like to teach people as much as I can while we're doing this. But so anyway, there's a little bit of a tidbit for everybody who doesn't know much about financing. But my course goes into all that in really deep detail. But Scott, so let's talk about you talk about your company, talk about what you can do for Canadians, like maybe some stuff on. We don't necessarily need to go into rates because it's going to change all the time, and everyone's specifics are going to be different. But what kind of things can we do for Canadians for purchase loans or cash out refinances or a fix and flip project?
In the States,
Yeah, in the States. Yeah. Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
so yeah, that was actually the fix and flip lending was the hardest thing for me to source. I don't know if that was hard for you in the beginning, but when you're a Canadian, a lot of the lenders, they don't want to lend to you because they're like, how are you going to flip this property in a different country? Like that's their mindset.
Right.
Um, So we've actually amassed a bunch of fix and flip lenders that will do it. So we can finance up to 90% of the purchase price and up to 100% of the renovations. I've even got them to do upside down loans where the renovations were much larger than the purchase price. So that's a challenging one too. A lot of lenders, they don't like that.
No.
But we were able to get that. So that's good. And we have multiple lenders, so we can kind of shop around. But ultimately, I found for the Canadians, once you get a couple of properties flipped in the States, then the doors will open up to you and you can have access to tons of lenders. I've seen as low as we got a deal done at 7% for a fix and flip lender, which is
Whoa.
incredible.
On a fix and so people are wondering, like typically that's a high rate on a fix and flip loan because it's a high risk to the lender because they're taking higher leverage on construction and purchase. So typically those are up over 10 or 12. So to see that low is that's why I want to emphasize to people that is a significant number. This is not a long-term loan. Long-term loans will be much cheaper.
Yeah. And the caveat with this one is you have to have done 5 properties in the States to get the 7.
Yeah.
Right? But you work towards it. So you get in the market, you buy a few, and then as you get that experience, then the lenders reward you for your experience. So yes, we've got that. We've got obviously the buy and hold mortgages. And I was telling you before we started recording, we just kind of signed all the agreements, and there's so many different lenders, and there's actually a couple pools of lenders. But collectively, we're going to have access to 4,500 lenders, which is just ridiculous. I mean, we have so many already that I don't know if we're going to need more, but like we're doing it because we want to find those unique deals. Like if it's a super quick close, right? And it's a buy and hold, where do you go? So that's a challenge we found. A lot of DSCR lenders want 3 to 4 weeks for a foreign national, right?
Yeah.
So we want a super quick DSCR lender. Then if we're really trying to get the best rate, we want to be able to shop everybody in one stop, not pricing them online or calling them up, right? So
Well, yeah,
this is
that
going to
just ran through my head because you just said 45 lenders or 4,500 lenders. And I filled out applications for multiple lenders in the past, and even just sign up for or fill out like 5 or 3 applications is a lot of work. How does that work? Is it like some sort of portal that you can put the information in and people will kind of say if they're interested in it, or how does that look for the for scalability?
Yeah, so it's amazing. So this is why we're joining it. Super expensive. The fees per month can be 1,000 plus to access this. So it's not a cheap thing. But it starts with an online portal where the client does one application. That's it. Then they input their deal summary, or we can input it for them, doesn't matter, but the deal gets inputted and then it gets priced amongst all the lenders. And then if the client has an accepted offer, we just hit submit, get the lender, obviously the accepted offer, bank statements, passport, right? Because they want to see where you're from.
Right.
Because they do allow foreign buyers. I know this is specifically for Canadians, but there's some people here from Canada that their citizenship could be from different countries, right? So it still works. You can still do all of this. So they want the passport, and then generally, the bank statements for the seasoning of the funds, the down payment, which is usually 60 days worth. And then from there, it gets assigned to that lender, and we move on. So you don't have to do multiple applications. It's just one.
So they typically want to see the money in the US for 60 days ahead of the loan?
No. They want to see 60 days worth of funds, but it can also come from Canada. Or if it's from a refinance, that works too.
Because they understand. You can see the HUD or the settlement statement or whatever you're doing yet.
Exactly.
I think a lot of it with everything, every time I'm sending even just a wire to the US, it's having some sort of proof where it come from. I think the US is really trying to cut down on this fraud and money moving around without anyone knowing what's going on especially larger amounts over 50 grand.
Yep. You're right. And the thing is, for Canadians, it's even tougher because Canadians, when they buy over here or whatever they're doing, you need 90-day history. So Canada is actually more stringent. So for me, this is easier in the States because it's less.
Perfect. Okay. So yeah, we just talked about like some of the ability to do in the US. Like, so if someone was like, say new to this, I know we touched on this. You have the ability to help them out with the Canadian side. So like maybe just talk a little bit about the programs that you have for that. Like if you're able to do like a mortgage in Canada, if you can do a home equity line of credit, refinances. What is the availability to try and free up cash in Canada from your company?
Yeah, so we're really unique in the fact that we have a dedicated residential team and commercial. Some people try to do everything themselves, but we come from the standpoint of I'd rather have a specialist do that for you over here and a different specialist over here, and it just allows for higher, experience. So we obviously do purchases, we do refinances with the commercial, which is super cool because what happens with the Canadian investors is they get maxed out based on their debt to income ratios, right? So in the States, this doesn't happen, as you know, because when you're using a DSCR loan, it's based on the property's numbers. So they don't look at your personal. But in Canada, investors are getting maxed out. So say your bank or lender said you're maxed out. Through us, we can pivot and change lenders who have more favorable use of rental income. Because in Canada, lenders generally want to use half of the rental income. So we can
It's
switch to
tough.
lenders that'll use 80. It is. So we can switch to lenders that'll use 80 or 100% to get the borrower past that point, or we just go commercial. And there's a misconception because when people think commercial lending, they think that it's got to be an apartment building. But commercial lending in Canada is DSCR lending in the States. It's
Yeah.
based on the property. So if someone's maxed out, we can refinance their home, obviously not primary home, but investment property, and we can get them the funds, even if they're told no, and then we use that in the States. So, I mean, the benefits is we have lots of programs. Also, it allows us to coordinate the closings, right? If you have a separate person doing your US loan and your Canadian, if they're not synchronized, you might miss closings or there could be complications. So we synchronize everything, which is another positive.
Yep.
And the other thing that we do too is if a client is going to trust us on both sides of the border and move forward with us, we're going to buy down the fees in the States. If we're getting paid in Canada, and then we're going to also get paid in the States, we're going to scale back our commissions to help the borrowers save because we want to build a long-term relationship. So that's
Yeah,
kind
it
of what
makes
we
it a
do.
good win-win. Maybe you can either confirm or I don't know, unfirm this myth I have about commercial lending, right, in Canada. So this might be I might be completely wrong on this, but my understanding is typically the leverage or the loan to value is lower and the rates are higher. Is that fairly accurate?
Um, I'm going to say yes and no. It is deal specific. So you can go up to 80% loan to value on
Okay.
commercial, and that's what it would be on a purchase of a regular rental.
Yeah.
Okay, so you can. Um, I don't want to call it a lender here, but there's a credit union who also does home insurance, and they have a green logo in Canada.
Okay.
Okay. And they have the same rates, whether it's residential or commercial. So for them, it's no different. But there are other lenders that do charge higher rates if it's commercial than residential. So it is case by case, but we try to optimize it so there's no negative impact to the borrower.
That's fair.
Yep.
That makes
The
sense.
other
Okay.
thing, the other thing that's cool too, because the States, there's no stress test, but in Canada there is. But if we use a credit union, some of them don't have a stress test. So it does almost make it easier sometimes to go commercial through a credit union for no stress test over here.
Yeah, which could make it so you could actually do this refi on your Canadian stuff in order to have some free up some cash. Well,
Absolutely.
that's great. Scott, is there other stuff or other questions that I should have asked you about lending that you're thinking of that I may not have asked?
No, I just think, and I know you've spoken about this before, but I think this is sort of the first step for the investors is to find out when they want to buy in the States, are they closing in their personal name? Are they closing in an entity? We got lenders for both, so we can absolutely do both. But I think a lot of investors don't put as much thought into that entity process as there should be. So I actually do encourage the full-on entity as opposed to the personal name. Um, I'm sure you agree too, right? I mean, for
Yeah.
taxation, it's better so you're not being double taxed. But um, yeah, that is sort of the first step. So speaking to an expert to help with that is really the way to go, and then move forward. But there's so many nuances that are different per person. So again, kind of what we'll do is we'll price the deal, we'll give the pre-approval letter as well. And if the client likes all the terms, then they move forward. Simple as that. It's different in Canada, right? Because Canada, you have to supply all your income and everything to
Yeah.
get a pre-approval. Here, you just have to supply the property and then you get your pre-approval. So it's
Yeah.
much easier.
And depending on the state, and I've been asked to have the pre-approval with the offer to come in with it. And honestly, it makes it a lot. It makes your offer sound a lot stronger than saying, hey, we're getting a conventional loan, and they just, they if they don't see the pre-approval, puts the seller's mind at ease to have that. Or sometimes it's just a requirement, depending on the state.
Absolutely.
Yeah.
Absolutely. And there is one more thing that I would advise, and again, you've probably touched on this too, but a lot of investors like Michigan and they like Ohio because it's really low pricing, which it is. It's good markets. But just be cautious because some areas with a lot of the lenders, you cannot do the normal 5-year prepay. Sometimes you're forced to get a zero prepay. And what that means in English is that your loan, they're forcing you to take an open loan, and open loans have higher rates than if you do the prepay after 5. So what that means is after 5 years, your mortgage is open in the States, and every lender has that type of feature. But if you're buying a really small property, you might be forced to get an open loan, which costs more.
So besides the cost, is there any other downsides to that?
I don't think so. No,
Okay.
because I think it's a benefit because then it doesn't matter whatever the rates are doing. If you want to refinance, you're like, okay, I'm ready. You
Yeah.
don't have to, no penalties.
And right now it looks like it should be going down rather than up, at least in this where we're at right now. At least that's what the Fed was. We're starting to the Bank of Canada and the Fed are both looking at downward pressure now on the rates instead of the upward pressure we've had over the last couple of years.
Yeah, which means values are going to go up too. So that's why it's a perfect time to get into the market now.
Yeah. I've been saying that for the last half year. Everyone's like, "Oh no, the market's going down," and I go, "Yeah, but this is the time you can buy it at a discount." He's like,
Oh,
"Stuff is sitting on the market. People are scared to buy." I'm like, what's the Warren Buffett's thing? Do the opposite of whatever the crowd was doing. I'm like, there could
yeah.
be an opportunity if you buy it right. Like it's going to be hard to lose if you can get this thing at half price right now. It's going to be hard to lose.
Absolutely. And even if you buy it for just cash flow in mind, forget the appreciation, right? Because
Yep.
in Canada, right, people that bought 2 years ago, their homes are now just being worth what they paid for it. Do you know what I mean? So if you bought for appreciation, you would have been SOL for the past 2 years. But if you buy for cash flow, kind of doesn't matter about your property's value as long as you're not trying to sell or refinance, right? Just it's covering the bills, and then you just wait until the market rebounds.
Yep. And depending which loan program makes this most sense for you, like in the US programs, you can do a 30-year term, 30-year amortization, or I think even some of the lenders have 40s. But
Yep.
typically I do 30s for myself or 25. And it's compared to Canadian real estate, it's predictable. You don't get that jumps, you don't get the changes. It just, you don't looking at your calendar dreading that 5-year mark coming up. That you can
Yeah.
just run this out, run the business plan, and it's a little bit more firm about some of your numbers. Property taxes will change, insurance will slowly creep up, but at least you can take the lending and make that predictable, which that's what you
Absolutely. And
want.
I'm glad you mentioned that too, because in Canada, I read an article maybe about a week ago, and it said like Canadians are so fearful of the renewals because their payments are going to double in some cases. Where in the States, that challenge with the rising rates didn't impact really anybody. Because, like you said, you can have a 30-year term and it's for the whole life of your mortgage. Your rate is what it is. So if rates go up and down, as long as you stick with your mortgage, you're fine. There's no fluctuations.
Exactly. Yeah. Awesome.
Yes.
So, Scott, before I let you go, you want to give the listeners your contact information so they can track you down?
Yeah, yeah. So it's either on our website, which is just lendcity.ca. Okay. Or you can call my cell direct. I personally like to speak to every client that I can because, like I mentioned earlier, we have experts on the team that specialize in things. So I get the client scenario of what they want, and then we'll partner with who's best on the team to help service them. And my cell is 226-348-7884.
Awesome. Well, thank you for coming on the show, Scott. Lots of information. I think I think a lot of it is just having more options for Canadians to be able to grow and expand their portfolio, and somebody they feel a little bit more comfortable with than a complete stranger that they're Googling on the internet, because some of those aren't real people.
I know. Be careful. You have to be careful. We found a lender that says, "Oh yeah, we're going to give you guys 100% financing of everything," and it's a scam. Like, so there's, things can be too good to be true. So you're right. You want to avoid that.
Yep. Anyway, thank you for coming on the show. I really appreciate it.
Thanks as well, Glenn. Take care.
That was a nice video. Bye.